PayPal stock is down over 12% over the last 24 hours alone. Is it finally time to step in and buy that one? I think we said that multiple times as this stock has just been in free fall. Definitely talk about this from a technical perspective. It is absolutely basically at a 52-week low and a key level of support. It can be a technical area where you really pay attention to that. And we'll also talk about this in context of those Q3 earnings, which came out after the bell for PayPal. We'll talk about it in context of the valuation, of the revenue, the balance sheet, the cash flows. If you own PayPal or you plan to own PayPal, this video will give you a lot of clues into what you're investing in. What is going on, investors? Hopefully, guys are doing well out there. Time to talk about PayPal. Over the last year, this thing is down big, down 66%. Year to date, down 60%. Even over the last 6 months, this thing is down 15%. Shoot, over the last month, down 10% over the last 30 days. We still got a gigantic $96 billion market cap on this one. I guess maybe some of that is justified a little bit. Certainly not from a growth rate perspective. Typically, when you see these companies with large price to sales, price to earnings ratios, it typically has a relatively strong growth rate. Maybe in today's market, a mid-teens grower or low teens grower out into next year and the year after is solid enough for investors. We've got a revenue run rate between $6 and $8 billion projected over the next 2 years with this one. That's like less than $30 billion or so per year in revenue. So you're looking at a 3x sales multiple on this one. And certainly from price to earnings, it says 20 here, but when we roll through these financials, it's actually quite a bit higher than that. Revenue came in the most recent quarter at $6.85 billion. That was 10% growth year over year. It did beat expectations by about $30 million. We got some guidance for the full year. Revenue expected to be right around $27.53 billion. The previous outlook was actually a little bit higher than that. The company said that they were going to earn about $27.85 billion, so about $300 more than they just guided for. And obviously Wall Street kind of came in right at that number as well. So they're going to come in on their full year revenue guidance if they're hitting these numbers to a reasonable degree of accuracy. But they did bump up their non-GAAP EPS. So they say that they're going to earn between $4.07 up to about $4.09. The previous consensus was actually south of $4. So you were getting a little bit less revenue, but they're going to drive, at least from a non-GAAP perspective, more earnings there. So that is good. Now, we also got Q4 guidance as well. We'll talk about the Q3 here in a moment where we'll roll through all these financials, but they gave us Q4 guidance as well. EPS between $1.18 and $1.20. Consensus estimate was towards the low end there at $1.18. Our revenue is where you're going to see it come up short at $7.38 billion. Consensus was closer to $7.74 billion. Here it is here. Now, what I noticed about that Q4 is the low end estimate was for $7.38 billion. That was even underneath the low end analyst estimate. I mean, there's 34 people covering this stock and nobody had it south of 7.5. And the company says that potentially it could be as low as 7.38, maybe $7.4 billion. Certainly not positive for that all important Q4 shopping season. Could say something about the consumer a little bit, but it also could be just saying something about PayPal's negative reputation, which really took a hit back in October. There was a story, or at least it circled around the interwebs, that they had a policy that they could have, quote, fined or simply seized, I think it was up to $2,500 from your account if you spread, quote unquote, misinformation. And obviously, I think we can agree there is certain things that are absolutely misinformation, but there's a lot of things these days that are a little bit more gray and are probably more up for debate than information or fact. And so it certainly had a lot of attention on the internet. A lot of people saying that they were going to cancel or stop using PayPal. Whether or not that ends up happening into the future, we did certainly see that, though, from kind of this guide down in this revenue, and we'll see for subsequent quarters if this company can't reaccelerate back into kind of a low teens grower, because that is what Wall Street is expecting. Now let's jump into these Q3 numbers. We had that revenue at $6.846 billion. Again, that was 10.8% growth year over year when you were closer to about $6.2 billion. This company does a nice job. We just did a video on Block or Square. I swear if Block Block would run its business more than PayPal, I actually think this business or this valuation that PayPal has probably could be more attributable to Square, which has a much lower valuation than PayPal. And one of the reasons why PayPal, I think, achieves a slightly higher valuation is they just operate the business a little bit more efficiently from an operating expense side and certainly a profit. Certainly, if they're seizing money from consumers for misinformation, maybe it contributes it to a little bit. But you had transaction expenses. You've got all your cost here, and they didn't go up a whole lot. Notice your total operating expenses over the last year went from, we'll call that $5.14 billion, went up about $600 million to $5.7 billion. So we added about $600 to $700 million to the top line, and we added about that to the operating expense line. Again, not necessarily the greatest thing from a shareholder perspective. Certainly when you're looking at a $96 billion company and you grew your revenues 10%, but look what happened to your operating income. It barely budged. It went from $1.043 billion up to just fractionally higher to $1.12 billion. So again, just fractionally higher despite 10% growth. That's why you've got to have this company kind of reaccelerate into at least a low teens grower, because these operating expenses are essentially baked in over at this company. One thing I did want to point out is you do have these transaction and credit losses. It went from 268 up about $100 million to 367. That's something we're just keeping an eye on, not necessarily just for PayPal, but the overall consumer as well. As you see those transaction loan losses kind of mount, certainly shows that there's some pressure in the underlying consumer. You pulled all the way down to net income, and it looks like they had some other income coming in at $460 million versus just $122 last year. So your net income is actually a little considerably higher, from about $1.1 billion up to about $1.3 billion. So your diluted earnings per share went from 92 cents to $1.15. There's slightly less outstanding shares. I believe this company is buying back the stock, but this is why we always dive into the numbers, because if you look at the headline EPS, if you look at the guidance for the fourth quarter EPS, you're thinking, oh, this company is obviously doing a lot better. Not really from an operating perspective. From just operating PayPal.com, we're actually not seeing a lot of profit generation, at least over and above the revenue growth that we're experiencing. And the net income you generated in this third quarter at $1.3 billion was almost all of the net income you've experienced over the last 9 months, because you notice that the company has now $1.5 billion worth of net income for the last 9 months. Again, most of that coming in the most recent quarter. And a lot of that had to do with the fact that they have some other income coming in, likely some equity investment came in for this company. Now, come down here to cash flows, and let's see if it paints a little bit better story. Sometimes with these companies, the operating profits don't necessarily line up with your cash flows. You pull down that $1.3 billion worth of net income. Last year was closer to $1.1 billion. I noticed over the last year, your stock-based compensation actually went down over at this company, and applaud this. I tell you what, Jack Dorsey could absolutely learn from this company, because as this stock is just continuing to go down and down and down, they've actually reined in the stock-based compensation, which I think is a good thing for shareholders. It does mean you don't get as big of a number to add back into your operating net income, but you did generate considerably more cash flows over the last year, from $1.5 billion all the way up to $1.9 billion. And you see that's a number, it's not quite annualized, but its other quarters have been pretty good from an operating cash flows. Through 9 months at PayPal, you generated $4.6 billion. Let's give them a great fourth quarter. They'll generate, we'll call it $2 billion worth of cash flow. So for the full year, you're right at about $6.6 billion worth of operating cash flow. Again, this is a company with a $90 billion. In fact, it's a little over that, $96 billion, although now we're down 12% in the last 24 hours. And so that's a valuation that's probably closer to 90 or the high 80s. You're still like well over 10 times operating cash flows, which is not a cheap valuation at all. Certainly on a company with kind of a low teens growth rate, which could come under fire in the coming quarters as well. Flow through the rest of the cash flows. Everything looks good. The last thing I wanted to point out to you is the fact that the metrics still look pretty good over at this company. Active accounts are just up 4%. This is I believe, kind of a saturated company. Most people obviously have a PayPal account that want one. And we actually see the most recent quarter that ended September 30th was the slowest active growth rate that you've had over at this company over the last year. And you have to wonder if some of that had to do with the fact that this policy that they had in place may have turned some people away from signing up for PayPal. The number of transactions, though, the people that have stuck with PayPal and are sticking with it, are up quite a bit, although sequentially we are seeing that number basically go flat, but year over year, you're still up 15%, and your number of transactions still going up marginally sequentially, but year over year, still a very strong 13%. So you're still seeing strong metrics from the people that already have a PayPal account, but we did see the number of active accounts maybe go to a level where we have to be maybe a little concerned that that viral story could have an impact on PayPal. Now, come over here and look at this from a technical perspective. It's a beautiful setup if you haven't been in this name already. We are now down here. If this stock trades close to about $69, I'm seeing the 52-week low on this one is close to 67. So you're essentially sitting on a 52-week low. We've had this green box with this stock marked out since we've been analyzing this one between about $70 and up to about $90 per share. If you believe in PayPal, if you are comfortable with this valuation and you're comfortable with the fact that you are paying a premium for a company that is getting more and more competition, and while it's growing its revenues, it's not really translating into a lot more operating profits. Not only in the most recent quarter, but you see over the last 9 months, our operating profits actually went down from 3.2 billion down to 2.6. And I'm not exactly sure what's going to spin that in the other direction, since I don't think this company is going to be able to reaccelerate these revenues, and the costs are more than likely just baked in, and they're doing a nice job, but I don't think they are able to drive these costs down any significant amount. But if you do like this company, this is absolutely an area where you can buy it. From a technical perspective, you should get a bounce somewhere down here. I mean, I tell you what, if this stock makes another leg lower, it is going way lower. I mean, we're talking the next area of support. You do not want this $70 level to be broken, because there is just a smattering of candles here, and you are coming down probably south of like $40 on this one. That's why if you are to step in on this one, I would have some kind of way to bail out on this one. Obviously, that would have been the right strategy over the last year. And yes, I do know that this stock is down big, over 66% over the last year. But as you just saw, this $96 billion market cap, or we'll call it 80 some odd billion dollar market cap, is still a rich valuation for a company that's best growth days are likely behind it, and on top of that, doesn't have a tremendous amount of pricing power, and certainly gets caught up in negative news stories from time to time as well. That was PayPal. Hopefully you guys enjoyed today's video. I'll be back in soon with more. Good luck with your investments.